Good evening, traders. 7th of April 2022. This is a Thursday evening, 20 minutes past 8 p.m. And it seems like the Indian markets, the Indian equity markets, are slowly dripping for the three consecutive negative sessions, with today's 137 points down move from the Nifty near-month futures. We have the first day, which was down 80 points. That was Tuesday. Yesterday was 150 and today 137. Slow drag towards the downside after the recent bounce back. Yes, such corrections after a reversal of the trend is a common phenomena. And if we put in a little bit of careful observation in this entire up move, bounce back, then you would identify two areas which have given us complex corrections, in which prices have dragged themselves down in a zigzag manner, leading to two or more than two legs on the downside. The last one, this correction, if we try to evaluate and understand it from a high to low basis, is around 2.5%. And the current one that we are dealing with is around 2.6%, 2.5%. So it seems like more or less in line. Let's not forget the channel. We did notice resistance at the upper border of the channel, and now we are dealing with the lower border of the channel. With the late hour correction in today's session, you will also observe that some degree of positive divergence with RSI indicators have started to develop. These are short-term divergences. So any kind of move, if you see above this red bar's high tomorrow, and what is this high for the Nifty future? It's 850, 17,850. I think that the index will call it a bottom for the week and may resume its rally on the upside. This is a possibility for the index tomorrow. The flip side of it, if it cannot gather the kind of strength to deliver this bounce back, and if it slips below today's low, then yes, maybe there is little more pain left. Now, for last 3 days, we've been dealing with this 80, 200, 130, 40 points correction, and the moving averages are still intact. The previous highs are not yet tested. So we shouldn't be wrong by saying that not a damage to the underlying uptrend yet. But if it slips below 17,500, that is, if it slips back to this zone in which it throughout it consolidated and gave this breakout, this move will completely be given away. That's not a very good sign. That will be the first sign of caution, definitely, no doubt about it. Don't foresee a great correction, but any further weakness from here on will start to definitely raise a doubt question that, is this a good enough of a reversal, or there's something more, something bigger than what meets the eye right now. We're not there yet. The Bank Nifty did deliver a little bit of outperformance in today's trade. You can see that it was marginally positive, but positive at least. It was up 9 points for Bank Nifty. That's not even the skin of a peanut, but nevertheless, it was not a negative day for the index. Healthcare, pharma, real estate were the only sectoral indices which were positive, especially the healthcare and pharma, which was close to 0.5%. We will be discussing two pharmaceutical stocks in today's market wrap. So before we go to those two healthcare stocks, Nifty underlying trend is intact. Momentum is slowing down. Till yesterday, even till today's close, 17,730, so far so good. Okay, all right, but please nothing more than this. Then it might, start to worry or start to threaten the underlying uptrend. if within the next couple of sessions, especially tomorrow, if we get a move above today's high, then that will bring in a little bit of more confidence back to the underlying trend. And the nice looking weekly charts over the last 5 weeks, 4 weeks have been positive. This week so far it has slipped from its intra-week high. So a little bit of bounce back, a little bit of regaining of the lost grounds and a close above 18K. This will be highly appreciated. So let's see whether that kind of a move the Nifty delivers or not in the next few trading sessions. 17,500 on the downside, 18K on the upside, and short-term triggers will be today's high and today's low. Now, the pharmaceutical and the healthcare sector has been doing okay. They've moved into an uptrend. They've been dragging themselves up. Few stocks that I would like to discuss. Cipla was one that opened and delivered beautiful momentum right after the open in today's trade. It was a clean breakout. It did pick up some beautiful buying impetus, which will be very clear from the 75-minute time frame, which is this one. But after that, it actually failed to hold on to its early gains, and it kind of gave away all of it, and kind of right now is consolidating. The underlying trend across the short term, medium term, as well as the long term is still positive. So there's enough supports to support this kind of a intraday weakness. And I feel it's closed at 1042. Any kind of a further movement above 1050 or today's high of 1064, and definitely we are heading for a new life high from this stock. Lupin is another one which is well beaten down stock. It's trying to reverse its trend. You can very clearly see that this particular stock has been in a downtrend, and it's now trying its best to reverse the trend. So the breakout for the stock is clearly at the psychological round number 800. So keep a close look at this. And another stock from this pack which is completely range bound and is taking its own sweet time, I don't know, to decide which way it wants to break out, is Dr. Reddy. One good thing and one cause of concern. First, the good thing is slowly but surely the underlying trend of the stock has managed to turn up on the upside. This was the rally, and post rally this is the consolidation, not a correction. So as long as the trend is still intact, the possibility of a breakout on the upside is higher. Now, the not so good factor is a couple of days back we did see a breakout day, which was this one, and it played out very similar to what Cipla did. Pretty sharp move in the morning, and towards the afternoon it sold off. Now, these kind of days are marked as breakout traps. These are days where the prices breaks above a certain level just to slip back towards the afternoon. So for Dr. Reddy, I think it's going to be make or break. For Dr. Reddy, I think that a slip below these lows and this uptrend is definitely going to retrace further down. On the other hand, if we get some participation and the stock manages to break out and sustain, which it did not here, then yes, we will get some confidence back to the stock. The levels on the upside is around 43.89, 43.90, 4400, and the level on the downside is around 4200. So 42, 44 are the levels for Dr. Reddy to keep a close watch at. Now, as we record this session, global markets are mildly negative, and SGX is down 76 points, dealing with 17,662. European markets are also negative. Crude and gold both managing a gold in fact managing a decent bounce back, close to 1% up at $1940. So overall, equity still seems to be a little under pressure, and it will be extremely important to see whether the markets manages to stop this 3-day continuous fall and save a little bit towards the end of this week's close. All right then, take care of yourselves, trade well and trade wise.